Well, guys, home prices are still apparently overpriced, unaffordable, as the Fed cut sparks mortgage rate melt up. And I picked this one from ZeroHedge because I think we need to talk about what might be ahead for us. The 10-year yield chart that is on the screen right now, this is from ZeroHedge, and it is the 10-year yield. And it shows the Fed rate cut of 50 basis points back in September, and it shows where we're at currently today, and it's projecting what is up ahead economically.
Yeah.
I think it is front-running what they think is going to happen and what is going to need to be in place for the headwinds ahead. The headwinds ahead? Can you say that? Is that too many?
Headwinds ahead.
Yeah, I don't know. What was that? What was that scene from The Office when he's like, how the turntables have...
Turntables turn.
Yeah, some Michael Scott thing. Okay, the claim here is that the market seems to be screaming a policy error pretty loudly. Agree? Disagree? Was the Fed rate cut an error, or is this just another function of the market happening because of uncertainty, because of election stuff, because of global politics, because of whatever?
No,
like, what do you
this
think?
was done purposely.
I believe everybody was waiting for
I'm
a
just asking the
25.
question.
Yeah, no, this was done purposely.
Everybody was wanting a 25 basis points, but then when they did the 50, I think it sent out alarms like, yo, what's really going on here? Because I thought it was 25, but now you're going aggressive at 50. What's really under the hood?
Again, there's more to it.
Oh, yeah, of course.
There's way more to it. We talked about earlier, what is our deficit? How much do we pay in interest on an annual basis alone to borrow money? So that 50 basis point, it's something that helps relieve. It's like when the rate's lower, our government, just like we do a home, we're able to refinance. So we're able to refinance our debt.
Yeah.
So we have to reduce this. On the next one, reduce it. Next one, hey, we're just going to refinance lower. And now that that we talked about, the 1.05 trillion that we paid in just debt service this year, that should go down. It'll go down. And now we are able to print more, right, and still pay the same amount.
Yes.
Yeah, I mean, I would hope that we can start making progress on it with the interest payment alone being across $1 trillion. It makes it hard to make headway, right?
Yeah, because it's 20%. When we're making 4 to 5, we said that it was $4.4 trillion that our federal government made in 2023.
Brings in revenue,
right?
Yeah.
But if we're paying $1 trillion, then
of interest.
How are we going to get it out of this?
Yeah.
It's going to be virtually impossible.
Just paying the minimum.
Yeah. So this was absolutely done, and it's going to continue to go down. Like I said, I think the Fed later down the line, they're going to create some type of catastrophe so that the rate can continue to go down, and now we can pay off this deficit much sooner.
They have to justify why it is. They have to cut it really sharp and really fast. So I'm excited.
What do you think, Andy?
I think, I'm going to state something that's here that I totally agree with. I know you guys are seeing firsthand, which is the whipsaw is really messing with homebuyers' confidence. This is messing with people because the front runners who saw it in the summer and everyone saw, Fed's going to cut. When August happened and rates went down, people took action massively. Yeah. We went from, having rates that are elevated and sustained to, oh my gosh, rates are going down and they're going down quickly. Yeah. And a lot of people rushed. And now you have the lagging effect of people who didn't take action, and now they're stuck back where they were before August. Yeah. So now you have end of October, beginning of November of 2024, and some people are in exactly the same spot they were in freaking June, 6 months prior, because they didn't do anything in August. Yeah.
And
you can't tell I'm irritated by it.
No, but I'm right there with you because it's like, don't get too greedy and you trying to have the lowest of the lowest when you know how things have been, these last couple of years with volatility, up and down, and you've been hearing it everywhere. And I just feel that if you waited that time and now you're trying to get in, now you're months behind because it's like, how are you going to catch up when you should have taken action when you were waiting for that one sign to come and it came and you're like, I'm going to wait more. And
because now I don't know when that bus is going to come back around again. No. I can't sit here and tell you, in December it's going to come back, or January, it's February. I don't know what's going to come around. Yeah. It may not be till March, which is your favorite talking point about when rates start to cool down, or I should say ease up, and people start thawing out from the winter slumber. Is usually March, which is now 5 months away.
Start to increase it again. They start going up again.
Right. So my irritation is because I really dislike it when homebuyer confidence starts getting pummeled, because I do want to see people own homes. I want people to have a place that they can call their own, whether it's because they want to just kick their feet up at the end of the day, sit on the porch drinking tea, or they want to share it out with a bunch of their friends and have joint expense sharing to make some money or whatever.
If you can if you could afford it, get in it. It's going to get harder. It's not going to get easier. I'm telling you. I could already tell. Like, I have a 19, a 20-year-old. I'm like, I could already expect they're going to be living with us for a while. You know, those are the simple realities with these rates and everything that's going on, these home prices. It's going to be a while, you know?
And I mean, in general, in history, when have prices come down or gotten cheaper?
Yeah.
The collapse of 08
But
and 9.
besides those, catastrophes that we can't control and nothing could do,
Yeah.
it's only gone up.
Yeah.
Everything's only gone up. Everything. I mean,
And it always will be.
Yeah.
Always be. It's supply and demand.
and that's why I feel that if you were able to produce more, it kind of matches up with whatever you're, paying more. So it's like you can make things cheaper, but then that breaks other things by trying to, force how do I say, like bringing down the rates. That also breaks something somewhere else where inflation goes up. So I feel that if you produce more, there's more money in the economy. There's more companies, paying their their employees a lot more, then they're able to withhold higher prices, higher cost of living. But until then,
Yeah, crazy times.
I wanted to point some out to you guys. If you look at the bottom of the chart on the page that Memo's at right there, Brian. You're on it too. Sorry. So if you look at the bottom of that chart, if you look at where we're at today on the very far right, if you draw a straight line to your left and you look at the point in time when we were at that same rate, it almost makes a perfect V. The chart makes almost a perfect V. And it's almost the same exact equidistant time as well. So the time to get from where we were at, so the rate we're at now with the 10-year to where the Fed made their cut, from where the Fed made their cut to now is almost the exact same number of weeks. So we saw a direct inverse reaction to the Fed rate cut in the weeks following it that we had seen the opposite leading to it.
So the V's for victory.
The V is for something. I don't know.
Volatility.
The V is
Volatility.
for
That's a good one.
punishment. V for punishment.
Yeah.
So
crazy.
Please stop.
they went right back in the direction at the same rate and speed that they came from. Okay, so
That is crazy.
Another couple things here really quick. I do think that this could potentially put a damper on listings, which we had just talked about earlier in the show. The listings are at this as high as they were, or the best they have been since 2019. Now that could probably damper leading into the new year. So we're going to have to come back and go, in the rearview mirror, it looked like quarter four ended up having this net negative impact. That's yet to be seen, but I am expecting it, honestly.
But it's true. November, December, that's the cooling off period.
Yeah.
For real estate. People are wanting to, that's it. I'm done. Holidays are coming. I want to decorate my home. I want to spend and create, memories here, etc. So,
well, and I think
that's the cool down.
And it's dual function. You have that happening. Plus, you have part of most of the country that is literally cooling down, where there's just not a lot of sales. And then you have now this kind of force function of the market rate causing that as well when it comes to behavior and appetite and all that kind of thing.
Yeah.
Brian, any thoughts? It's okay if there aren't any.
Nah.
All right. People are changing their budgets big time. Lastly, on the very last page, another Fed rate cut in the face of this strength will only worsen the situation. Here's my question. Do you think it would, or do you think it could temper the market heading into a very contentious new leadership at the White House?
So it's funny how you mentioned inverse last time. I wrote right here, another cut would increase rates, ? I'm hoping for an inverse effect.
Yeah.
So, hopefully, since they went up higher this time, once they cut, it'll come down lower.
So I wrote a note here as my final point to you guys on this article and the show in general is something I already mentioned, but I'm going to say it again, is no matter how the chips may fall, I think half the country's about to be super upset. The question is, which half will it be?